All right. Hello, everyone. Sorry, I started a lot later than I had anticipated. I was going to come back on at 11:15, or sorry, 11:30. It's just about 12:30 now. That's Mountain Time. Um, it's about 2:30 East Coast time. Had to deal with some technical issues. It's funny how when you trade and when it's just me, there are certain quirks, nuisances, things like that that I just blow off. But then when I'm broadcasting, all of a sudden they're important and I have to get them fixed, like charts taking a really long time to load like they were earlier today. Um, and this is not a tirade. This is a very important point. When you're trading, the software that you're using is important. You have to know it, you have to understand it, you have to trust it. If it slows you down, if it hampers your productivity, if it gets in the way of your ability to trade, fix it. Um, Call your customer support, tell them what's going on. The expectation, go in there with the expectation they're going to help you fix it. This software needs to be workable for you and for your style of trading. If it doesn't, there are plenty of brokers out there. Go find someone else. Go find a different broker. Not meaning to be callous. It's just, look, if you're trading, you're doing it to make a profit, and time is money, and you can't be messing around with software that doesn't work the way it's supposed to. Having said that, before we really get into the afternoon trading session, let's just kind of talk about where we are right now. I was just looking at the indices. The Dow opened this morning at a down 150. It may have been down 180 at one point. I know the futures were down. The Dow futures were down 180 at one point. They've come in considerably in terms of they're off their lows for the day. Considerably, the Dow is trading right now around 17. It's 6 basis points. The Nasdaq 100 is down 0.5% still. It's down 34. Nasdaq Composite's down 30 bips. The SPX, the S&P 500 is down 20 bips. The Russell, this is interesting. The Russell's doing the best right now. It's only down 4 basis points. It's down 0.57. It's interesting. I say that because the Russell is usually your leader. When the market's taking a turn for the better, the Russell's usually the one that leads you out of a correction. The Russell's usually the one that leads you into a correction. And it's interesting that the Russell, it's down, but it's flat. I mean, it's the best, besides the Dow, it's looking like the best performing index right now. I don't know if that's because of tax reform having been passed, like we're still kind of riding that kind of sugar high from the tax reform, because the conventional wisdom is that tax reform is going to help smaller companies disproportionately. On the other hand, you've got the Dow, which is your large multinational conglomerates that are only down right now 9 bips. So it's just an interesting observation. I've got to do something about my VWO position. It's down 420 for the day. I started the day at $3,800 profit. I'm gonna have to either liquidate it or put some protection on. So we'll talk about that this afternoon before the market ends, before the market closes. I want to spend some time. I'm hoping to trade some futures today. I want to spend some time kind of talking about technical indicators. I would say that as a trader, my strength, or probably where I spend most of my time, is on technical analysis. Fundamental analysis, I'm not saying that I'm great at it. I think my brand of fundamental analysis is very intuitive. I don't sit down and dig into transcripts from conference calls or look at balance sheets, things like that. I mean, those are important things to do. I'm not trying to dismiss that. It's just not what I do. My fundamental analysis is more intuitive. Once I use fundamental analysis to identify what I want to trade, I use technical analysis to determine when to trade it. I use technical analysis and I'm not saying this is unique to me. I think a lot of traders do this, but just my approach to it is that technical analysis helps you with your entry points and your exit points. Entry points and exit points are very important. You can't just go into a trade like at random. I'm going to buy some Google today, and after I've made a lot of money, I'll sell it. No, that's a recipe for disaster, because trading, because you're dealing with money, unless you're dealing with paper money, which is something I recommend people do, is before you really get into trading full time, if you've never really done it before, get with a broker dealer that will allow you to download their platform and trade it with fake money, just to kind of get a feel for their platform, to develop your own trading system and trading style. Keep in mind that when there's real money on the line, all that's going to go out the window, because once you deal with real money, you're going to have emotion, and you're going to have to adapt for that. But having a plan is very important. It helps you overcome that emotion. And if you can be robotic about it, because here's the downfall of any trader. You buy Google, let's say you have an entry point. I'm going to get in at this price. And when it trades up to whatever, I'm going to take that profit. But if it trades down against me to whatever my stop is, I'm going to get out. A lot of traders hang on hope, like, oh, okay, so it hit my stop. Like, I didn't put the stop order in there, I just have it marked on my chart. It hit my stop, I should get out, but I got a feeling it's going to turn, so I'll just hold on because I really want to take that profit. No, do not do that. You have to be ruthless about this, okay? Think about it. You're the CEO of your trading firm, all right? Your trades work for you. They're your employees. If they don't do what they're supposed to do, fire them, okay? There is no write-up. There is no corrective action process. There is no put them through training to make them better. Get rid of them. Kick them to the curb. If they're not doing what they're supposed to be doing, once they hit your criteria for getting out, get out and move on to something else. I'm going to get off my soapbox here. So where I was going with that is, I use technical analysis to get in and get out. Having the plan is important because it eliminates emotion. All right. This is not going to be a tutorial on technical analysis. I'll talk about different, over the course of broadcasting, in the coming weeks. I'll touch on different aspects of technical analysis, whether it's chart patterns, chart drawings, candlestick patterns, different types of indicators, drawing on charts, resistance and support, wedges and triangles and all that good stuff. We'll get into that. What I really want to talk about today is stochastics. I like stochastics as a way to identify an entry point. Okay. Now, as you can see from the screen that I have up right now, I look at charts and I look at the stochastics across multiple time frames. Okay. If I were to, let me get a better example here. Again, okay. One of the things that you want to avoid when you're using technical analysis is that you don't want to become myopic. You don't want to drill down. You want to take a look. You want to drill down. You want to take a look at that. What is it doing? But you don't want to miss the big picture. So here's an example. If all I looked at was this 4-hour time frame on win, okay, and I decided this was the time frame I wanted to trade off of, okay, I can see, and we'll get into this in a second, the histogram of the stochastic indicators is improving. It looks like once it crosses that 0 line here, that it's going to be a buy. You're going to want to go long, okay? That's only looking at this 4-hour time frame. If I zoom out and if I look at my daily chart, I would see a different story. I would see that this is the current bar. It's not, it could end the day lower, like worse. The histogram could be more negative, or it could end the day closer to that 0 line. I don't know because that bar is still forming. If I look at the monthly or the weekly even, you can see, now this is the first day of the month, okay? You can't really go off of this, and this is, we're 4 days into a 5-day week. This histogram crossed over last week, and it's continuing in that direction. Okay, that's telling us that from the standpoint of this time frame, it looks like Win is going to continue going down, unless that momentum is going to continue until some outside force acts upon it. It could be a positive news event uh, related to earnings, or the Nevada Gaming Commission investigation, whatever. But that is going to continue until the time frames on either side change it, or some outside event changes it. That's how I look at it. And if I look at even shorter time frames, like if you focus on too short of a time frame, you're just going to get whipsawed. If I looked at this 1 hour time frame here, or this 15-minute time frame, I would say, hey, I can still catch a move up. Now that's fine if my hold is like I'm going to get out of it before the end of the day, or maybe first thing tomorrow. That might be fine. But if the idea is that I think I'm getting in at a bottom and I want to hold on to this thing for a few days or a few weeks or a few months, I can't go off of this. I would have to go off of a different time frame. The reason why I'm going into that is it's just I look at multiple time frames, because looking at multiple time frames is telling you a story. I'm a big believer in kind of the fractalization effect when it comes to trading patterns. I believe that trading patterns in shorter time frames, intraday time frames, are sometimes mirrored or form that same pattern in longer time frames. I believe that looking at the 4 hour could potentially be a clue to what's going to happen on the daily chart. It's not a predictor. It's just, I think of it as a leading indicator. A lot of traders spend their time trying to find the perfect indicator, and I've done it myself. I'll raise my hand and say I've done it myself. There is no perfect indicator. Get comfortable with a few and understand what time frames they work for you and how they work. Like earlier, I said that stochastics work for me for figuring out how to get in. I don't necessarily like them for helping me figure out how to get out. I like to use moving averages instead for that. Or just taking a look at the price action and figuring out when it seems like something's petering out. Then I might get out. But if you take a look at, let me expand this day chart here to kind of show you what I'm talking about. I have two indicators, and they're both a flavor of stochastics. Okay. This first one that I'm hovering my cursor over right now is the stochastic plot. It's got, the terminology is full K and full D. Basically, the green is full K and the red is full D. The full K is the faster and the full D is the slower. The full D, and I gotta apologize, the technology, the math behind it, like the technicals of it, I'm not necessarily savvy on. I know how they work. Okay, the full D is an average of an average. The full K is an average. Basically, you're taking a look at momentum, its price and time, and to put it very crudely, when the full K or the slow line is, or the fast line, this green line is going up, you're expecting that the stock has an upward momentum, and the opposite is true, that when it's going down, that the stock has a downward momentum. Okay. When the full K crosses below this threshold of 20, that's a signal that it is oversold. When it crosses above 80, that's a signal that the stock is overbought. Now, I don't look at just full K. I also look at full D, because in my experience what I find is when the full K crosses below the 20, for example, all right, that doesn't necessarily mean that that move down is over. The stock could continue to go up, even though it's technically from a fast indicator standpoint, It's technically crossed into oversold territory. The full D hasn't gotten there yet. The full D I think of as kind of residual momentum from longer, the next time frame out. So here's where you kind of see it. Is I don't have a really good example here to show you. Well, I kind of do. Never mind, scratch that. The way I look at it, though, is that the full D is a slower indicator, and I generally am not ready to consider, I would not be here from a daily standpoint, I would not be ready to consider WIN as having been oversold until that full D crosses down below the 20. Now, I am bullish, at least I have a position that is bullish on WIN right now. So even though this technical indicator is going down, I believe that there is news-driven positive information that is causing this stock to go up, and it is up today. It's up 3.5%. Okay. Again, technical indicators, the momentum continues until some outside force acts upon it. And it could be that the outside forces, which is whether it's sentiment or positive or negative news, whatever that is, it could be that this is causing a turn in the stock. We do see it in the shorter time frames. We're seeing upward momentum across the 1 hour, 15-minute, 4-minute, and the 1-minute charts. We're seeing upward momentum. So at least for today, like this is what I'm trading off of, okay? If I were to make the mistake of saying, oh, this trade is now an investment, that would be stupid to do. Like I'm going to hold on to it for a lot longer than I had anticipated, because I figured this would be like I probably wouldn't hold on this for any more than a week right now. Right now I'm sitting on a decent profit on it. I've been kind of waiting for it. It's been kind of back and forth across the zero line. From negative profit to positive profit, profit to loss. Now it's positive. Because I bought Feb 16s, I can hold on to this until the third week of February. I hope to be out by then. But what I don't want to do is, if I actually held the stock, or if I was in a leap, like a longer term option that would allow me to hold it for like maybe a year or two, I wouldn't do that. I might do it if I was looking at these shorter time frames, okay? But I wouldn't do it if I was looking here. Because what this indicator here, this weekly chart is telling me, is that for that time frame, like that kind of a hold, this is overbought. And if this continues, I'm going to be in a world of pain if I'm long this issue. Eventually I'm going to get out. I'm going to capitulate and get out at a significant loss. So that's kind of a brief treatment of how I use stochastics. There's a thing called being in the zone. And when you're trading and you're in the zone, and I felt it, you're in tune with the market, you watch a chart and you feel the motion as if you were on a boat that is rocking, or as if you were actually feeling the motion yourself. And these stochastic indicators are very helpful for that. Think about this as being like an indication of gravity. Okay? Gravity is pulling down on the stock, and whether gravity is negative sentiment or bad news or whatever the case may be, it's pulling down on the stock. It's like a rubber ball. And eventually when it hits the floor, it can bounce. Here it bounced a couple times, it lost momentum, and then it got kicked up. The bulls kicked it up, and it peaked, and it came crashing down and did a big bounce. So sometimes as you look at these chart patterns, it helps to, in your mind, kind of compare them to same things that you see in real life, whether it's a bouncing ball or whatever works for you. But I like to use these technical indicators as a way of kind of feeling the motion of the market. When you're in tune with the market, when you're in the zone, you're going to do your best trading. Let's take a look at futures, which I have not touched really at all today. I've been trading the indices, so the mini S&Ps, the mini NASDAQ. I traded gold yesterday. I traded crude yesterday, crude oil. A lot of times what I pick to trade from the standpoint of futures, I pick it because it's in play for whatever reason. Crude was in play yesterday because the EIA numbers came out and there was a build in inventories, and that was initially bullish. I will bet you that crude, if I were to look at it, is probably bullish today because Goldman Sachs came out and said they have a 6-month price target on crude at $82.50, which it's at the 65.74 level, so that would be a huge move up. This is a 15-minute chart. Let's look at the day. So yeah, considerably compared to yesterday. So I picked futures to trade based on what I think is, which ones I think are in play. Yesterday gold was in play because the Fed came out and they held rates steady, which would be bearish for the dollar. Keep in mind that gold is a dollar denominated asset, so it's heavily influenced by what the dollar does as well as by just the fundamentals of gold itself. Gold is considered a safe haven, although it's interesting that gold hasn't really been acting. It hasn't acted like the safe haven the way it has in the past because of cryptocurrencies. Like everybody's saying, a lot of people are saying, well, Bitcoin is the new gold. I don't buy that for a second. You can't, okay, when Armageddon comes, you won't be able to trade Bitcoin. You won't be able to bribe the border guards with Bitcoin. You won't be able to trade it. It's not tangible. Gold is tangible. That's why it's a store, because it's a store of value. That's why it's a flight to safety. But because it's also a dollar-denominated asset, these gold futures, when the dollar goes down, it's going to have a bullish effect on gold. Now, initially, when the Fed number, the Fed minutes came out, or it wasn't the Fed minutes, it was the release came out yesterday. Although they held rates steady, they also indicated that there was their stance on the future of rate increases had not changed, which would be bullish for the dollar. If there are rate increases on the time horizon, more people are going to want to park dollars in, or park their money in dollars. That creates a demand for dollars. Dollar price goes up. Dollar goes up, gold goes down. And that is what gold did yesterday. When the minutes first came out, I'll show you somewhere different. When the minutes first came out, gold fell. And then it rebounded. And then it fell, and that's what it did pretty much for the whole day. Now, I haven't really looked at gold today. It is up, 45 basis points. So it is up. It looks like it had a good run starting here. Now it's in kind of, basically trading sideways. If I were to draw trend lines, zoom out a little bit. I'm going to draw trend lines. If I draw a best fit trend line, right now it's already broken below it. So here's what I might expect gold then to do. It's going to have a decision to make. Okay. This is what I consider to be the best fit trend line because it has some touches here. Basically that shows it to be support. Having moved sideways, it's broken out of that trend, but you also have this downward trend. So it's got a decision point here. Is it going to continue to move sideways and break through? Is it going to break up, or is it going to break down? The longer trend, which is this upward trend, is most likely to be the one that holds sway. Now, we're below that. So what you might expect it to do is even if it breaks through here, it's going to come hit its head here and then come back down and possibly ride this trend line down. All right. Based on this, I would kind of sit tight before I do anything with gold. I would want more clues as far as what it's going to do, because this is kind of an inflection point here. If it hits its head here, it's going to trade down along this trend line until some outside force acts on it and causes it to go up. And the outside force acting on it may be support. If it trades down here and it hits support, now it's going to have an inflection point here. Oops. It's going to have an inflection point here. It's going to have to make a decision. Oh, not there. It's going to have a decision to make here. Is it going to bounce? Or is it going to follow this downward trend and break below support? We don't know. So what do I want to trade today? Well, obviously the Dow is in play. I mean, it's up 35 points now. The NASDAQ 100 and the NASDAQ Composite are still down. The Russell looks very interesting. It's up 26 basis points now. We just looked at it. It was down 4. So I want to look at the Russell just for fun. Let me clean this view up a bit. This indicator is a type of market profile. I won't get into what it is. It's called monkey bars. We'll talk about that on a future day. Let's look at a blank. Let's just take all the drawings off. Okay, so this is the day. Let's look at 15-minute. When I trade futures intraday, I like to look at 15-minute. And I focus on these time frames: 1 minute, 4 minute, 15-minute, and an hour. Now I talked a little bit before about how the stochastic plot works. The stochastic histogram is interesting too. So if I look at 1 minute, well, it just changed. It looks like it's about ready. It's almost overbought. So here it looks like it's going to turn down. If I look at the 4 minute, I see a different picture because the histogram is on an upward slope. I see that when I look at the 15-minute, I'm sorry, this was the 4-minute. When I look at the 15-minute, I see that the histogram is also on an upward slope, but this bar is still forming, so that cannot necessarily be trusted. But I do see that on the hour time frame that this histogram is also currently on an upward slope. So that tells me this is more likely to be able to be trusted. When it comes to looking at subsequent time frames, this 1-minute time frame is not acting in a vacuum. Let's say that this bar were a little bit shorter. Maybe it even crossed over to a negative and it's red. It's crossing below the 0 line. That tells me that, at least from this standpoint, a correction is imminent. Okay, would I get into a trade? I think that if I do that, I'm going against the grain, because from the standpoint of the 4-minute chart, I mean, it's on an upward slope. It's about to correct, but that bar is still forming. Plus, I've got this slow stochastic here, which is kind of moving upward. So that tells me that there's still some residual momentum pushing it up. If I were to go short here, I think that I'd be going against the grain. Looking at the 15-minute confirms that because of what the stochastic is doing here and what the histogram and the stochastic histogram in the 1 hour is doing. It's telling me I'd rather be long of this than short of it right now. If I really want to confirm, let me look at the 4-hour time frame, which is my next time frame up, and see what it's doing. And what it's doing, it just crossed over into the positive. I mean, look at this huge bar right here. I mean, it went down. You know, this isn't quite an engulfing pattern, but it went down, and then in the next bar, it went up. Okay, it didn't go up the full range, but it went up pretty considerably. Now, at least this bar shows it's going down. However, having said that, it barely crossed over here in the previous 4-hour time frame. This bar is still forming. This bar would be, if this closes green, about where it is right now, or at least higher than the last bar, that's a confirming signal that you've got upward momentum on this particular security. So my strategy in trading the Russell now then is going to be a long trade. What I am going to do is I am going to bide my time until this slow stochastic here, not just the green stochastic. I mean, the green stochastic is going to tell me, if I were to put an alert there, once this green stochastic crosses below 20, that tells me, hey Tim, start watching. Okay. Once the slow stochastic crosses below the 20, what that tells me is, all right, get ready to put on a trade. Start taking a look, get serious about putting a trade on, because everything that I'm seeing, my context is telling me that this is going to bounce up. And in fact, I could put a trade on, and there's a chance I would be right. I just think that looking at this picture together, with this time frame looking like it's on its way down, and this time frame looking like it's on its way up but weakening, maybe it's going to go down. I just think this is a trade that I'm just begging to get whipsawed, and that's no fun for anybody. Unfortunately, when I trade the trade ladder, if a trade goes against me, I can just instantly reverse it. That's dangerous because I've done that before, and if your timing is bad, if you are short a stock, all right, and you decide, okay, it's going up, so I'm going to reverse it to be long, chances are you just did that at the top of the move, and now it's going to reverse against you again in the opposite direction. And if you allow yourself to get whipsawed, you trade back and forth, and I've done this, so I'm speaking from experience, you're just going to compound losses upon losses upon losses, and you're going to have a huge hole to dig yourself out of. Best thing to do is, if you're wrong, just get out and wait for the setup. Now, right now, momentum is turning. So if I had decided to go short, based just on this, I might be right, because yeah, it's continuing to go down. But the fact that this green bar, it's changing its slope, it's looking like it's curving back towards an upward, that might make me a little bit nervous. Okay. My prediction is that this is going to continue to go down, that the slow and the fast stochastic are going to, and look, it just did that there. The slow and the fast stochastic are going to start moving down, and it's almost like the law of attraction. It's like once they get headed in that direction, that 20 threshold, it's magnetic. It's going to pull it down. And once it does, then I get ready for it to bounce. Let's take a look at what other futures are doing. I'm going to keep those charts in the corner of my eye. We talked also about Dow futures, because the Dow was down 180 before the market even opened. It's up 27 now, so it's positive. Now, looking at this chart, I might say, yeah, I think I can go long and be right. I would not be prepared to do that, though, until this bar closes, which it's actually going to do in about 12 seconds. So if this bar closes above the high point of this bar, you take the bar that reached the lowest, and if once you close above that, then you can initiate a long position. I'm going to go ahead and initiate a long position right now, because looking at the stochastics on the other on the multiple time frames, it also looks bearish from that perspective. So I'm going to go ahead and initiate a long position here. Now, once this fills, okay, so it just filled, all right. So I got in at 26,163. I didn't do a bracketed order like a one cancels the other. A lot of times, especially when you're starting out, you know, get with your broker on how to do that. But you can create combo orders where you place the order and it will also initiate a stop and a profit target. Maybe you can do just the stop, you don't have to have the profit target. I definitely recommend having stops, especially when it comes to trading futures, because futures can move fast and they're highly leveraged. Okay, and you'll start to realize some big losses quickly if you're not careful. Okay. One of the things that concerns me right now, you can see it's trading through these moving averages, and it just made a huge move up. Okay. This makes me a little nervous because these moving averages act as like a type of resistance. They're calculated by, you know, past price action. Let me go ahead and just flatten this just to take my profits, so I can talk and not have to, so I don't have my attention divided. So basically, we got out for a small profit. I did one contract that's $5 a tick, so it just moved 14 ticks in a minute or so. That's pretty good. If I really wanted to, I could have held on to this, because I think that this is going to continue to go up probably about to this level here, like this, what is this, 26,250, where these bars started to go red. It could conceivably trade up to that level. Another possible destination would be this is not a 200, it's a 243 moving average. My moving averages are weird. You'll hear people talk about 10 period, 20 period, 50 period, 100 period, 200 period. I do powers of 3, and it works for me. You don't have to do it. Do what works for you. 3 period, 9 period, 3, 9, 27, 81, 243. That's how I do it. So this green line here is at 243. It's close to that 200 period MA, which you hear a lot. Like crossing over a 200 period MA, a lot of times signals a reversal, or it could also be a continuation move, a signal. We looked at the S&P before. Let me pull that up. Now, what's interesting is how far extended the S&P is above the 243. What I was going to say is a lot of times what you hear is, when if the Dow crosses the 200, or sometimes they say if it crosses the 50, go bearish. The thing is that once it crosses the 250, you've seen a huge correction. I mean, we're talking from 28 down to 23. That's a 500-point move. That's like 1/6 of it, almost. That's like a 12.5% drop. But I mean, even if I change this to 200, it really doesn't change anything. I mean, it gets you a little bit closer, but you're still way extended. So I would not really. That's not even in my thinking right now, because it's just so far extended above that point. What I might look for here is a reversal signal. If I'm a short-term trader, look at a reversal across the 9. This is the 9 period moving average. This is the 27. That's actually also the middle of my Bollinger Bands. I'm not going to talk about Bollinger Bands today because that's a lengthy discussion. But not only is it the center of the Bollinger Bands, it's also a good level. It potentially could be a good level of support. So one play for me might be if the S&P closes below this 9 period MA, I'm going to initiate a short position and write it down to the 27. And once it rides down to the 27, then I might just get out and take my profits, or I might decide to hold on and see if it continues, and then add to my position if it continues. That's one way that you can use moving averages to initiate and get out of positions. Like I said, I use moving averages more to tell me when to get out of something. I don't necessarily use it as a way of initiating a position, although you could. That's just me. I like the stochastic because if the time frames on either side of this daily chart confirmed, which actually it looks like they, hold on. Okay, one thing you don't want to do is get yourself confused. Let's take a breather. Okay. SPX, and it's probably going to take some time to load. Oh, it didn't. Good. that. What I was saying was, I like stochastics because I think that they get me in a little bit earlier. Trading a crossover like this is fine if that's what I'm comfortable with, but I also acknowledge that I gave up a lot of downside, which for me would have been upside if I'd gone short for way too long. Now, if you're a cautious trader, you might say, okay, this is what tells me to take a look at it and wait for it to cross over. That's my confirming signal. I take a different approach because, like I said, I look at stochastics across time frames. And if I'm looking at it, the 4-hour time frame on one side and the 1-week time frame on the other side, what I'm seeing here would have been a crossover, right? Looking at the 4-hour time frame tells me, okay, from this standpoint, it crossed over here, so it's been moving down, right? And the week time frame tells me this stochastic, it's about to cross zero. It's downward sloping, okay? It's not, there's something pushing this down, okay? Now, if I take take a look at it from the standpoint of, if I look at candles, okay, this 1-week candle, it hit an all-time high at 2872.87. And if I'm a longer-term trader, like I'm gonna hold on to this for a year. Like if I take a short position, if I buy puts or whatever, this is going to tell me what I do for the next year. Once I close below this candle, that would tell me initiate a short. Now, if I look at the day, based on this, based on what this bar did here on Tuesday, I would have initiated a short position because it closed below this candle on the day time frame. Okay? Remember, now we don't know what's going to happen over here yet, but if this is a leading indicator, and if this is a leading indicator, then what that tells me is that there's a very good chance that this will close the week out below this low. And if it doesn't, next week might do the same thing. But if I wait for that as confirmation, I might have given up a lot of that downward move. Now, some people may become more comfortable with that. They prefer having that kind of confirmation, okay? As for me, I like to get in early and just have a tight, if I'm really worried about it going against me, have a tight stop. You know, again, if I identify a trade that's going to give me 4-to-1 reward to risk, or 5-to-1 reward to risk, I'll take that small risk to make a big gain. You know, I've heard it said, when you're trading, think about it this way, like if you want to make big gains, you can't steal second with your foot still on first. So you can analyze all you want and wait for confirmation, and you could take the approach of, all right, well, I have a signal here. It's time to get short the S&P. I don't have it here yet, so I'm going to wait. And then when it closes below that candle, then I'm going to say, okay, now I want to wait for confirmation on the month. Like if it closes below this candle, all right? No, because well, one thing that's really weird is this chart is not drawing correctly. But my point is, if I just continue waiting for confirmation, eventually the move is just going to pass me by. You have to decide when you're going to take that risk. When are you going to put the money on the line and make it work for you? Now we've got about 45 minutes before the regular trading session closes. Futures, or at least the index futures, will trade for another 15 minutes after that. Then they take a 15-minute break, and then they trade for another half hour. I know this is confusing if you don't trade futures. And then they take an hour break, and then they trade for the night, the overnight session. It's really weird how they do that. So if we're going to trade futures, we've only got about 45 minutes to do it, is my point. And then I'll be paying attention to what Apple does when they announce their earnings. I'm probably going to be trading NASDAQ futures tonight because I think Apple's going to have a pretty big impact on it. When Microsoft and Facebook announced yesterday, they took the NASDAQ, the mini NAS futures, for a wild ride. It was interesting. So what's going on with our mini Dow? All right. We got in here when it closed above that low point, and we rode it up to here for about a $70 gain. You know, nothing huge. So that means on the day, yeah, that helped considerably. That $70 was $70 we didn't have before. Apple's up, Autodesk is up. You know, Intel, I'm not even worried about that one. That's going to expire worthless tomorrow anyway, so whatever. You know, Kohl's I'm watching. This emerging markets, I got to do something about that. And then Win. Win's doing well. There's a part of me that wants to take profits on this. But if I look at it, it might tell me a different story. If I really look at it, and I know we were looking at this just earlier, what this tells me is to hold on, because this downward momentum is slowing down. This bar is still forming, but with 45 minutes left, unless something crazy happens, there's a chance that this bar is going to show improvement. That doesn't mean that tomorrow the next bar could go lower. I mean, I've seen it happen. You know, look here. It comes down, and then you think it's going to cross over, and it doesn't. It reverses. You know, who knows what was happening at that time? The point is, there was some kind of outside force that acted on this to cause the stochastic to reverse course. So for Win, I'll hang on. I'll probably, after the markets close and I can have some time to kind of, you know, do some quality thinking, identify a stop. What I was going to look at was VWO, emerging markets. And I don't know what to make of emerging markets because there's a mixed bag of opinion out there. Some people are saying emerging markets are the place to be in 2018, and others are saying stay away from it. The weak dollar can hurt. Everything I'm seeing here is telling me protection. So now, if I think emerging markets are going down, where do I think they're going to go to? Let's clear these drawings out. Let's get rid of some of this noise. Here's what I see. I see support there, and it was actually resistance. Remember, past resistance becomes future support, vice versa. You could expect this to trade down to about here, and it's not unfathomable to think that this 27 period MA could have moved up to here and also be a point of support. So I'm inclined to sell a call against this going out to February with the anticipation that emerging markets, this symbol is going to trade down to about the 47.5 level. And then it can either bounce or it could push through. Can't predict that. I just know that this here is a key level. It's going to be a pretty important inflection point. So let's design this trade. All right. So this is the profit and loss curve on the existing position. I'm long 3 Jan 2019 calls. The strike is 26. It's currently trading. Let's see, my price slice is at 49.46. So it's had a nice run. Now it's correcting a little bit. I'm going to put on a call. Like I said, I think it's going to trade down to about 47.5. Let's go out to the next expiration. I can sell that for about 215. That's the midpoint. If it trades down to that 47.5 level, without the put or without having sold the call, if it trades down there, my profit drops to about 3,100. I'm at 37, 35. Open profit on that. So if it trades down to 47.5, I'm giving up about, call it 400 bucks. Okay. If I sell this call and it trades down to 47, I'm locking in. Basically, I'm locking in my profit. If I think it's going to go even lower, I could conceivably sell at lower call, or I could roll. I don't know if I want to be that pessimistic just yet. I mean, if I put a Fibonacci on here, let's see what that looks like. So we're looking at the last year. So it was as low as 37.84. It traded up to 59.09. It bumped its head at this 50.99. Let's put real Fibonacci numbers in there. 236, 382, 50, 618, and 1. You can find these key levels anywhere. Just Google it. Alright, so what this is telling me is that it could trade down to this 47.88 level, which is a little bit above the 47.50. If it breaks through that, it's a coin flip. I mean, I think it could either stop at 47.50 because the market has memory. You know, it knows that that this level was resistance before. Or if there's some outside force acting on it, it could push it down to about 45.96. So let's be pessimistic for a second. And actually, you know what? This was resistance here, so that could also be the next level of support. So let's model this. Let's model instead what happens if we sell the 46. If we sell the 46, we're going to get midpoint's 355. I'm going to unselect that other one because I don't want to model both, because I'm not going to put on both. I'll do 350 because you can't do nickel increments. Okay. If it trades down to 47.50, I'd protect my gains. If it trades down to 46, I lose about $300. However, if I sell the lower strike for more money, then I can trade down to 46 and be protected. And actually, at expiration, I'm going to make about $200. If it goes against me, I don't lose money, but I give up a heck of a lot of upside, so that's a consideration. Because when I sell the 46, technically that gives me the obligation to sell stock to them at 46, so if it's trading at 48, they pocket a $3 profit. That's all built into options pricing. I'm not going to go into options pricing. I might do it on a future live cast, but there's all kinds of resources on the internet that will kind of explain how options pricing works. And on the other hand, if I sell this 47.5, at expiration I make that couple $100. I'm protected down to about 47.60. But if it goes down to 46, I'm not. So it seems to me like the better way to go is, if I want to be careful, like, I don't know. Where was I? Here. Looking at this, I don't see the danger of protecting myself down to 46. To me, it seems like it's all upside. I can protect myself down to 47.50 and probably be okay. I just don't see the danger of doing that. The reality is, if I put the position on now and I protect myself, it goes down to 47.50, and if it bounces and I think it's going to keep bouncing, I can still buy my 46 back for a profit. Probably not as much a profit as if I had the 47.5, but still a profit. At this point in time, the name of the game for me is protection, because I still have I can still hold this option out to 2019. I'm not dealing with a lot of time decay right now, so it's not like I want to roll it to another one yet. I'm just looking at what it's doing currently. Well, the market about to close in half an hour. I'm not going to wait for a better. I'm going to wait for a better trade location. That's just silly. Midpoint. This is probably going to get filled. I'd be shocked if it didn't. Oh, wrong account. Okay, hold on. Still working. They want me to go down to 345. Only because that's the midpoint. You can't put an order in at 345. It's just now it's at 340. I don't like to chase down, but I might have to. Now it filled at 340. Okay. All right. So now I can rest a little bit easier on BWO. That's been something that has been kind of I've been worried about. But I take a look at what the other indices are doing. I take a look at realistically the prospects of a weak dollar. I look at this chart here and I see that even though the week hasn't closed yet, there's a strong chance it's going to close below this bar, which to me is a bearish signal. The other aspect to it also is oh, that's just a mess. Yeah, I'm not going to mess with that right now. Bottom line is everything that I'm seeing is telling me this is going to go down. So it's time for protection. All right, we're running. I've still got half an hour left, so let's trade some futures. Okay, so look what the mini Dow has done. It closed above, but even though it closed above, it failed. So it looked up here and it failed. And now it's on a pretty pronounced move down while we were messing around with that VWO. And I would say I don't want to initiate a position. I don't want to try to catch a falling knife. But what I might want to do is wait till these stochastics move back up here, because it'll reverse slightly, probably up to about, I don't know, here, and then it'll continue that move down. And that's when I want to catch it. Everything else is lining up. The 4-minute, 15-minute, 1-hour time frame it's all lining up. The 4-hour even confirms it. I mean, it's not like the histogram went that far above the 0 line. I mean, if you compare it to when it was below. I will bet you that if I look at the S&P, we're going to see the same thing. Yep. So the S&P, it's starting its move back up. It's going to go, I predict it's going to get up here. I don't want to initiate. I mean, I could do long, like I could go long right now, but the thing is, like, I don't like to trade against the grain. I mean, this is kind of iffy. Like, it's starting to turn downward. I don't like to, it's like swimming upstream, you know, why do it? You're going to get whipsawed, and who needs that? There's enough frustration in life as it is without that adding to it. Oops. The NASDAQ is probably doing the same thing. Yep, identical. What's the euro doing? Yeah, very similar. Not that they're correlated, because they're not. But if I look at the Dixie, which is the dollar index, I bet you we're going to see the opposite picture, which is that dollar is strengthening. Yep, dollar it's oversold, it's strengthening, and that's having the opposite effect on all your counter currencies. Your British pound, your euro, even gold and silver. Yeah, what this is telling me is that there's going to be some bumpiness because it's still kind of bottoming. It's still kind of bottoming here. You know, I really don't want to start taking a look at. I'm not going to go long. I can't go long the dollar. But if I do the counter trade, which is gold, okay, let's say If I think that this is in the near future, this is bullish for the dollar index, and it's going to be bearish for gold. So if I take a look at gold, you know, what this tells me is that there is something besides just the dollar weakness causing this move up, because this still has a ways to go. The topping process is occurring here in this 15-minute chart. What has crude oil been doing? Crude oil is up $2 or 2%. It's up $1.30 today. I think when we looked at it earlier, it was 65.74. So Goldman Sachs came out and said they think that their 6-month forecast or price target is 82.50. That's a big move above. That's a 30% move up. And it might be tempting to go long oil here, but this is just these time frames are too toppy. And of course, when I say that, like, it's moving up, but still, that's a no touch for me. Okay, so we've seen a bounce. It hit this 27. I'm sorry, that's a 9-period MA, and kind of bounced off of it. So I wouldn't necessarily. That might have been a good point to short it. Once it looked like it was going to bounce off of this moving average. Yeah, that would have been a good spot to short it. I don't want to short it now because it's already made such a big move. I'm gonna wait because it's gonna bounce again. If I look at the 1 minute, it's getting ready to bounce back up to this moving average. I mean, this orange one here, that's the simple 9, which is different than the Wilders. This blue one here is the Wilders 3. 3-period MA. Sometimes it can be like watching paint dry. It's making a move back up. It's 1:43, 3:43 East Coast time. There's 17 minutes left, 16 and a half. If you're not familiar with what a trailing stop is, when I first heard about trailing stops, I really liked them. Because when you initiate a position, let's say you set your trailing stop at 8 ticks, okay, so basically what that means is that if you get into the position, if it immediately turns 8 ticks against you, it's going to stop you out, okay? As that goes up, the stop follows you up. So if it moves at least, let's say it moves 10 ticks before it turns against you, okay, you've locked in 2 ticks of profit. So it's interesting because it will let you, it will help. It's a management tool. But the thing is, if you set your trailing stop too tight, and sometimes these things can be really volatile, if you set your trailing stop too tight, you're basically almost guaranteeing that you're going to get out of loss, and you're only going to want to do that for so long before you finally decide, you know what, forget it, this is not working for me. This last 15 minutes of the day is so volatile that sometimes I just don't even want to trade it. Because the picture that is being drawn is very fluid. It changes constantly. Like right now, we're rebounding. There's significant upside momentum right now pushing this up. The bulls are winning here. Okay. It traded to this 9-period MA, and it closed above it, and looks like it's going to continue. But it could very well all of a sudden just decide, you know what, I'm tired, and move back, like it just did. See, that's the thing. Now, it wasn't a big move. It wasn't a big counter move, but I don't know what it's going to do. And see, that's why trading when we're kind of in the middle here can be so treacherous. Because right now it looks like it's going up. And it is. But even when this fast K, the full K, gets above 80, like I said, that's not a strong enough signal for me because of this residual upside momentum. Sorry, I took it away from you. Because of this residual upside momentum in the full D. But the thing stopping me from going long right now is the 4-minute time frame and the 15-minute time frame, because those bars are still forming. And the 1 hour time frame shows me I'd rather be short of it than long of it. So yeah, sometimes waiting to get in can be the most boring part of your trading day. And this is what I'm about to say is from having observed the futures a lot. By extension, I think that you witness this in the cash markets and the Forex markets and whatever other market that you want to look at. These futures do not spend a tremendous amount of time making big moves like this. If I were to put it in terms of a percentage, I don't even know what percentage I would tag it at, but I would say like 80% of the time or 70% of the time they're consolidating. They're moving sideways. They're not making big moves up or down. And you have to resist that temptation to trade. You have to resist the temptation to be in a trade for the sake of being in a trade. So you have to be the kind of person that can come to grips with periods of inaction. If you're an action junkie, I don't know, paper trade or go to Vegas or something, but don't do a trading. You're just going to hurt yourself. So something has just happened. I'm going to get in on this and I'm going to explain what it is. And that may have been a mistake. What had just happened was this picture changed. Now it's showing up. And it just got me out like a $10 profit. So I probably had my trailing stop too tight. The other aspect to it also, though, is that this momentum, I mean, even though it was making this upward change, like now it's doing it again. See, this bar is still forming, so it's showing crossed and then it's showing not crossed. That arrow keeps coming and going. So now it's crossing above this 200 period MA. Like, that's a buy for me. And actually, that was a mistake. See, this is what happens when you don't stick to your system. Okay, so now it's just the 4-minute chart. Okay, the next bar was drawn. That's confirmation to me. The problem is, on the 1-minute chart, we're so extended that just because this is showing up, this is risky. So it's almost like now I want to wait for it to be here before I take a long position. And remember what I was saying earlier about getting whipsawed? Like, that's exactly what happens. A lot of times, your time frames, like, you want to look across multiple time frames for confirmation, but the 1 minute and the 4 minute are telling me two completely different things right now. The 1 minute is telling me to go short, the 4 minutes telling me to be long. Well, I can't do both, so I got to pick one. So in that case, my choice is stand pat. Wait for more information. I think what this is telling me, the full D hasn't crossed above 80 yet. So what this is telling me, this here, that's effectively neutral, because full K is on the way up, full D is on the way down. They cancel each other out. That's neutral. So just because this histogram crossed over doesn't mean it's going to continue in that direction. We still have significant downside momentum here and here. We have a top forming here from the standpoint at least of the 1 minute stochastic plot. Looking at the moving averages, I'm ping-ponging back and forth between the 27 and the 243, and actually this is the 81. See, it tried and failed to get above there. It didn't. It tried twice, and it closed below it, below these moving averages twice. Now this is only the 1 minute, so it's not like it's, this is not very durable. I could walk away and get a cup of coffee and come back, and this picture could have completely changed because it's such a short time frame. So it made this big move up, kind of petered out, made it move down. Now it's kind of consolidating, like it's just digesting its whatever gains, I guess. It's going to close. Well, the cash market is going to close in 4 minutes, 3 minutes and 15 seconds. If the last 15 minutes are volatile, you can bet the last 2 minutes are crazy. Got 2 minutes, 34 seconds left. Now it's 2.5. So this is making a run for this. These two moving averages here. Not doing a very good job of it. So when you're watching the market like this, figure out what it's doing. What is the mini Dow doing right now? And how good a job is it doing? See, before it was trying to move up, but it wasn't doing a very good job of it. Now, all of a sudden, now it's going gangbusters. It's moving up towards this moving average. But is it going to do a good enough job? Like, is it going to cross over? Right now it's failing. We've got less than a minute. What the heck? I'm going to take a gamble. I know I shouldn't do this, but I'm expecting it to move back up to this top Bollinger Band. I got rid of my trailing stop there because I want to be stopped out artificially. I'd rather have control over that. The cash market's closed now. Here's something that you want to do. Well, it is showing us 10 hours, never mind. So now we're just waiting for it to hit our target. There's nothing more frustrating than having a target and having your target touched and then having it back away without getting a fill. It sucks. It happens all the time. And it just filled. Something that I like to do, like I call it a pincher. It's like tweezers, it's like pliers, whatever. If I put just a profit, I've got this, it's a one cancels the other trade set up here. It's saved as a template. Okay, so we went from being up 70 to being up 100. I mean, another $3 in profit there. It didn't do it very efficiently because that was 8 trades. Cost of trade there, that was like $16, like $2 a pop. So $4 round trip. So my net profit on future trades is actually only 84. I would have liked to have done a lot better than that, but this is more just for kind of show, just to kind of illustrate how things work. I have a one cancels the other set up. It's got a profit target, which is limit order, or it could be a market order. And then the other one is a stop. Or actually, it's a trailing stop. It's a 4-tick trailing stop. So when I was when it was trading down here, and it hadn't quite peaked at this 26,173, I could have put my order here, my limit order, 26,173. I would have hit it on my trade ladder, and then what it would have done is it would have set my limit order at this 26,173, but then it would have set a trailing stop on the other side of it. So that way, the mini Dow can't steal my profit from me. I mean, if it's gonna move up and hit my profit target, then so be it. It gets me out. But if it decides to be funny and try and take some of my money and move against me, there's that trailing stop there protecting you. So you're not going to give everything back. I've had that happen to me enough that that's why I created this pincher. I call it the pincher template. So I'm going to be watching this off to the side. The Apple. Actually, you know what? Let's move to NASDAQ. Because Apple guarantee you that it's going to move the NASDAQ, the mini NAS futures. So right now the mini NAS is moving pretty quickly to the downside. It's not because of Apple. I don't see Apple moving. It's kind of stuck here in the aftermarket. If I pull up my news, and then nothing's come out yet. Trade Flash is just, it's not news, it's just telling you what certain issues are doing. You know, right now, Apple's, it's up compared to the close where it settled for the day. Okay, so the NAS is moving down because of Google, because Google reported, and apparently the market did not like what they heard. I did not put a position on Google. I didn't want it. Today's kind of a big day for earnings because yesterday was Facebook and Microsoft. Today's Apple and Google. Amazon is also reporting today. And it looks like Amazon beat top and bottom line. They didn't guide down, so that's good. So if I unlink these, so that I can watch what all three are doing. Apple, Amazon, Google. Oh, and I just realized you can't see that because it's not in the main window. Here's Apple, here's Amazon, here's Google. It looks like Apple disappointed. Well, no, because there's no number's not out yet. So this is just Apple just trading. Probably in sympathy with Amazon and Google. Or I should say more, probably in sympathy with Google, because Google missed, looks like. Amazon traded up. So I don't know whether there's going to be some positive pin action for Apple from this. A company called Qorvo that is a provider of RF solutions for advanced wireless devices, blah, 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 is on a run of design wins with Apple, likely the latest to source from the Greensboro, North Carolina-based company. Qorvo essentially confirms Apple design win. Nomura upgrades. Nomura Instinet analyst Christine Sciacca of Qorvo from upgraded shares of Qorvo from neutral to buy and increased the price target from 75 to 85. So that doesn't necessarily affect Apple. I mean, Apple's a customer of theirs. Let's see what the NASDAQ is doing. Mini NAS futures have kind of settled down a little bit, consolidating. When you see a convergence of moving averages here, that's an interesting sign. It's hard to tell you whether it's going to be a reversal or a continuation. It's going to be a area of congestion. Let's just put it that way. Right now, it's looking to be resistance for what the mini NAS futures want to do. They want to move up, but they're not. Anyway, it's 12 minutes after the hour. We're going to hang out. I'm going to hang on here till about quarter after. I don't think Apple's numbers are going to come out until probably sometime between 4:15 and 4:30 East Coast time. So unfortunately, I'll have to be sitting on pins and needles until then. But it's interesting to see what the NASDAQ is doing based on the numbers that came out from Google and Amazon. So here's what Google came out with. Reported, I should call them Alphabet. I still can't call them Alphabet. Reported Q4 revenue of $32.3 billion, up from 26 in the year-ago quarter, which that's meaningless. Other than the growing on a year-over-year basis. Better than the analyst consensus. So analysts were saying 31.8 billion, almost 31.9. Company posted a loss for the quarter of $4.35 per share, including a $9.9 billion impact from U.S. tax law changes, a decline from the profit of $7.56 per share recorded a year ago. Excluding the tax impact, earnings for the quarter were $9.70 per share. Analysts were expecting a profit of $10.07, excluding items. So I'm still trying to understand how that works. Well, yeah, that works. Okay. See you, bud.
Later.
You wanted to, where are you on?
Mom school.
Oh, that's right. Have fun. So, if it weren't for this tax impact, they would have had 970, and they still would have missed. I mean, even if they didn't have, it still would have been a miss. Because the analysts were expecting 1007, they would have only reported 970. Now, given the size of that miss, though, it's interesting that Alphabet isn't down even more. I mean, it went from 1180 all the way down to 1104. I'm not in the mood to do math in my head, but so that's that's a 6% drop from peak to trough. Even if you take a look at where it's trading now, it's at 1120. That's still a 5% drop. But what I don't know, because that tax impact is something that could have been predicted. Because, look, I'm no accountant, but I think they chose to book that tax impact from an accounting perspective now rather than later. So they probably gave some indication to that effect. But I don't see that here. That's Amazon. Could have been, I don't know. And if I scan through the news, the company's effective tax rate jumped to 138% from 22% in the year-ago quarter, and it booked a tax expense of $9.9 billion due to changes in the U.S. tax code. I mean, Alphabet tried to temper that by announcing an $8.5 million stock buyback. So based on this, what this tells me, I mean, we'll have to listen to the conference call. I think this is an opportunity to buy Google. Maybe not tomorrow. Maybe let things settle down a little bit. I really want to understand the nature of that tax charge. According to MarketWatch, this is interesting. According to looking at the option straddles, I mean, if you read this, it tells you that the implied move is not that big according to the options, the way options were pricing. It says here, investors shouldn't expect any extraordinary stock moves from Apple, Amazon, or Alphabet, as options odds makers, which are your market makers, are expecting price reactions that are mostly below the longer term averages. Okay, well, obviously that's not the case with Alphabet, because the implied move on Alphabet is probably less than what it moved. $47 was the implied move. It moved 60. It moved 80 at one point in time. Now, when things settle out, when all is said and done tomorrow, it may only be down 47. I don't know. We'll see. But that's bupkis. Just goes to show you can't believe everything you read, right? I don't see anything here where Alphabet warned about that tax. Of course, there's a lot of stuff here to kind of sift through. Sometimes, you know what, it might be easier just to use Google. Just Google it. Yeah, I should have known this because other tech companies did the same thing. So yeah, I'm pretty sure Alphabet did warn about it. I don't know that they necessarily, well, they wouldn't have announced the magnitude of this effect. New York Times story on January 4th, which I don't necessarily go to New York Times for my business news, but it will sound like bad news, don't be fooled. Over the next few weeks, some of the world's biggest companies, household names like Microsoft, Google, Johnson & Johnson, are likely to warn that their financial results will be severely dented, if not altogether wiped out, by huge tax bills that they have to pay the Internal Revenue Service. Don't be fooled. The big one-time losses are a prelude to even bigger profits, a paradox caused by the tax cuts that recently zoomed through Congress and that largely benefit corporations. So my guess is that this is the whole repatriation deal. Yeah, a couple of provisions in the tax package are prompting many companies, those based in the U.S. as well as some foreign corporations with a big American presence, to pay the taxman while anticipating huge savings for decades to come. The biggest factor by far is the requirement that American companies bring back money that they claim to have earned via overseas subsidiaries. Blah, blah, blah. So basically what they were doing is they were deferring taxes on these until they decided to repatriate them. Now that the tax package has, and this is not me reading from the article, this is me telling you based on what I remember. Now that the tax package has passed, these countries have the, not amnesty, but at one time, they have the ability to repatriate these overseas profits for a smaller tax rate. which makes more sense for them to do so in the long run. See, if they brought the money back, they would pay 35%. The tax rate could be as low as 8%, but definitely well below 35%. So that's the deal. So based on that, I mean, anybody, so Google, Alphabet, whatever you want to call it, that's a buy to me. And in fact, it may be a buy, first thing tomorrow. Be prepared for some pain, though, because the move down may not be over. It's going to be a temporary thing. Again, like I said, you can't steal second unless you have your foot. You can't steal second when you have your foot on first. This is the problem. I have so many windows open. Sometimes you forget where you were. Oh, look at that. The Apple news came out. So, maximize this. When I was putting my Apple trade on, I have to get rid of some of this clutter. Oops, that's settings. Make this look not so ugly. Oh, I already did it here. Good. It's a little bit easier on the eyes. Okay, here we go. So when I put that trade on that I showed you earlier, Apple was around 167. Okay, it's it. It's at 169 right now. The trade as high as 169.20. The implied market maker move was that it would travel. It could go to 174, or it could travel. It could go down to 160. So what did Apple report? Well, numbers aren't out yet. So that's just an organic move. Somebody knows something or thinks they know something. Because right now I don't see any mention being made of Apple in the trade flash. So chances are we're not going to know until about 2:30. Sorry, 4:30 Eastern. Mini NAS futures are open back up in about 45 seconds. They take that 15-minute break. Close at 68.96.25 right now. Looks like the 68.96.50 is where the first trade's going to happen. Where it goes from there is anybody's guess. Probably going to keep going down. Oh, it gapped up. But now it's immediately retreating. And Apple is plunging in the extended session. Apple reports EPS of 389 versus 386, so they beat by 3 cents. Sales 88.3 versus 87.28, so they beat, but they didn't beat by a lot. Apple's guiding down, which they do a lot. Apple sees Q2 sales in the neighborhood of 60 to 62 billion versus a 65.7 billion estimate. Now what's interesting is right now Apple's recuperating. I mean, it traded down to 162.55. This is a 1-minute bar, so like 2 minutes ago, 2 minutes later from that low, it's up to 167.5. So somebody's parsing the press release and they're liking what they see, is my guess. Because we're now up to 168.52. It traded up to 169.20 before the news even came out. And we're within striking distance of that spot right now at 168.81. So this is a wild ride. I mean, even if it trades up to even if it were to hold at 169.20, that wouldn't be good for me. Well, That's not 100% true. I could probably close out tomorrow for a small profit based on where the risk curve is, but keep in mind, volatility, if it's tomorrow, and heck, let's say volatility gets reduced by 40% at 169.20, that's a loss. Versus like almost break even. So here's what I really need it to do. I need it to go above 171 and 171 and a quarter. That's what I need it to do. And oh, by the way, that has to happen before the market closes tomorrow, because I picked such a tight expiration. These expire on Friday. So now, something that I could have done and I probably should have done, I probably should have given myself an extra week, because if it trades down through 167, I could have bought my short calls back for a profit, and then at that point, if it trades down low enough, the long call is probably worthless. So it couldn't go any more against me. And then if Apple rebounds, that long call could actually appreciate in value, and that would allow me to, if not break even, maybe make a small profit on the overall position. But at this point in time, you know, it's looking like, well, it's hard to say. If it trades down to the lows, down to 162.55, that's my best case scenario. My best case scenario is it trades through 172, or trades through 170, yeah, 171 and change. That's my best case scenario. That could still happen. You know, this is the after hours. I mean, this is not, you know, there's volume here, but this is not going to be, I guarantee you the volume in tomorrow's session is going to be way more than anything in the after hours. So just because a stock does something in the after hours, it does not necessarily mean that's what it's going to do in the regular session after earnings. You know, something, who knows what's going to come out on the conference call. Analysts could come out and say, buy, this is a buying opportunity. You know, we're going to reiterate our buy rating on Apple. We're going to raise our price targets now from whatever to whatever. I mean, that could all still happen. Now, this is not hope talking. I mean, I'm very sanguine about the fact that I'm probably going to lose on this position. I'm just thinking out loud. These are some things I need to consider before I pull that trigger tomorrow morning. Anyway, it's 2:37, 4:37 on the East Coast. I've stayed on a lot longer than I thought I was going to. Part of that is because I joined late, so I guess I'm making up for lost time. But anyway, I'm going to end the live cast now. One thing that I forgot to mention is, you know, I'm happy to do this. This is a free service I'm doing for all of you. If you appreciate what you're hearing, if you see value in what you're doing, if you're watching this video after the fact, it'll be archived. there's a card in the upper right-hand corner that says donate. You're not donating to me. You're donating to Wounded Warriors Project. It's a cause I feel very passionate about. I know that Wounded Warriors Project scores very high in terms of what they do with the money. They're very efficient as a charity. So if you see value in what I do, please click on that, do a donation. There's a FAQ that you can get the link to that tells you a little bit more if you're hesitant at all before you do that. But you can do that through your Google Pay account. Anyway, have a great night, everybody, and we'll talk to you tomorrow.